Hey guys, welcome back to a brand new video on the channel. Now in this video, I have an update for you on our yield farming positions. It has been a while, so I'm just going to sort of do an update, show you what has been going on, and to give you a sort of introduction to a strategy that you may have seen from some other people previously. I'm just going to cover this in case you haven't seen it. So just quickly before we do get into it, Bitcoin is up 5% today, Ethereum up 8.5%. The market's been pretty choppy over the past sort of couple of weeks. We all know that. And there's a lot of sort of things pending in the world right now politically that is, having some cause on the entire market, whether that be stocks, crypto, real estate, commodities, metals, that kind of thing. So there's a lot of things going on. Anyway, I am going to show you my positions. So right now we currently have 3 positions. You will note that we did have 3 positions open previously. However, I did add in an extra 500 into one of them because if you remember, I had that $500 sat around in the Rabby wallet. So the value is down because the market is down. However, I am not too concerned with it. I did rebalance my positions. And yeah, I did go ahead and rebalance some of my positions here to get back into range because we were way out of range. So I kind of had to do that. Now, this was a good test, okay? You can see I've lost around $1,100 in value from the 5K that I did deposit. We're down at around 4K, but I am okay with that, and I'll explain why. So the strategy that I want to talk about, and you may have heard it from a couple of other people talking about yield farming, is hedging your bets, essentially, or hedging your positions. So if the market does take a turn downwards and you go out of range, then you will still be printing money. Now, how does this work? Well, it is through shorting. Okay. If you're in a position and the market starts to take a downwards turn, you can then short on your position. So you can short WETH, and let's say you're in a ETH to USDC position, right? If we take a look at price in USDC, pricing with, you can see my range here is fairly wide between 1700 and 2K on this position here. We do have some assets sat in the wallet, by the way. We have around, I don't know, $100 or so sat around in here. But yeah, you can actually go ahead and sort of hedge your position here. So if the market starts to come down here, okay, well then you've already opened up a position. So if it starts to come down, well, then you've got something on a short position that you can claim rewards from. So you will either break even, so you won't lose value on your position. You'll actually be in profit because you would have made the rewards, or you will make money on your short position. Okay, so you can use a platform such as GMX or Hyperliquid. I personally like both. It really depends on what network you're on. Hyperliquid's obviously its own sort of network. Completely up to you which one you want to use. These are just 2 examples. There's a bunch of other futures dexes that you can use here. But let's go over to ETH to USDC, for example. Okay, and you want to click short here, and you can actually short the market, and you can use different leverage and whatnot. I wouldn't really suggest going higher than 2, maybe 3x. Just because you don't obviously want to be super extended that you could get liquidated and then it's just a whole mess, right? But let's say you have a range, okay, between, I'm just going to draw something out here just for the sake of the video. Let's say you have a range between, in fact, let's go into TradingView and I'll show you, I'll mark out a range here. Again, this is just for sort of an example. I'm not suggesting you go ahead and open a liquidity position on this range. This is just a complete example here to show you how this would work in theory. Let's say you have this range here, right? This is your LP range. So you've set it between 2000, let's say you're in a WETH to USDC pool and you've got it set to $2,085 as the higher range and 1,816 as the lower range. Again, completely random, just based on the daily chart here. I just drew this out randomly, not for anything This isn't a good range. This is completely random. I don't really care about the range. Okay, it could be up here to down here, whatever. Let's say you've opened this and then you open a short position as well. Okay, well, if the market starts to tank and starts to go back below this range here, you've got a short position open on ETH, so that if the market starts to go down and goes below this, or gets towards this bottom line and goes down this, beyond this, your position's out of range. However, your short position would be in profit. Okay. Now, what would happen the other way? Well, if ETH starts to pump and go up in price and goes out of your range on the upper side, then you've made a bunch of fees, and also you've made, you're out of range, right? But you've made a bunch of fees. So your short position will be in a loss, but you've made a bunch of fees that will counteract that. And there are tools out there where you can sort of pick and choose. There are tools out there that will simulate and show you how much of a short position to open so that you will make a profit on either side. Okay, so once again, you open this position, your ETH's currently at 1969. Okay, you open a short position the same time you open your liquidity position. If ETH starts to go down, not only are you collecting fees, but your short position is also in profit. If it starts to go up, then your short position will lose. But you are, again, making crazy fees. So you will break even. Plus the value of your LP is going up. Okay, so not only are you making fees, but really it just counteracts that from going down. So that if the market starts to tank, then you will sort of either break even or profit overall from the short position value plus your LP position value plus the rewards you're claiming. I hope this makes sense. I will do a deeper dive and a live example. I'm just sort of explaining this method. Now, obviously, I haven't done that in this sort of, I haven't done that with this portfolio here. This very, 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 very minuscule, tiny pool of $5,000 that I started with. I haven't done that, although I have claimed around $200 in rewards, but I didn't hedge my position. So what that means is my value is now down. Now, if I had hedged my positions here and I opened a short on Bitcoin and USDC and ETH and USDC, I would either be break even or in profit. Okay. So that is the strategy that is one strategy where you can hedge your position. Now, obviously, there are other strategies. You don't necessarily just have to do that. However, that is pretty much a delta neutral position, if you want to call it that, where you can sort of make gains either way the market goes. Because a lot of people in yield farming, what happens is they'll open up a position. If the market starts to tank, they'll continue to rebalance because they want the fees. Well, you've just lost a bunch of value in your in your initial deposit, which obviously we do not want. So that is one strategy, is to hedge your position. The next one is to obviously snuggle. I think a lot of people know what snuggling is. If you've been in the yield farming market for some time, you will know what snuggling means. For example, again, let's just use this ETH and USDC position here. If it goes out of range on the upper side, okay, you can see here that my range is set on the upper side to $2,074.80. If it were to go out of range here, well, then I would slightly rebalance my position, just ever so slightly, just so it's back in range. Okay, same thing on the bottom end. You can see my position here is the lower limit is 1785.81. So if it starts to go down below this, then I may just open up the position again, leave the upper band where it is. So I'd leave the upper limit on 2074.80, but I would just expand this bottom end a tiny, tiny, tiny bit here, maybe a few cents or a couple of dollars, just so that we're in range and still printing, and then we'll see what the market does. Now, obviously, there is a limit on this. You cannot keep doing that realistically long term, because you will start to, you'll essentially start, this APR will drop massively and your width will be way too wide that you're not actually earning any substantial fees. So you do have to be careful with that, but in certain markets, it does and can make sense. So those are really two strategies where you can sort of, hedge your positions, and it's sort of more of a delta neutral strategy in terms of, okay, I'm going to make money either way the market goes. So if you have a situation like this, okay, where you were, let's say for, math's sake here, that you were in a position here 3 months ago when ETH was at 3K, right? You know, you may have been in a position between, I don't know, 29.36 and $3,029. And then the market started tanking, right? Imagine if you opened up a short position when you opened this liquidity and we dropped right down to 1900 and that short position was still open. You would have made a ton of money, even on like a 2 or 3x LP. Not only would you made money trading, but you know, this is part of your yield farming strategy. So it's just a case of sort of hedging those. Okay, I hope this makes sense. I will do another video very soon, sort of going over a live example of this, but that is just sort of an explainer here, just to sort of explain to you what's going on here, and a sort of strategy where you can sort of just print fees. You don't need to worry about the bottom end or the bottom side of this position, this blue line here, because you have opened a short position so that you're covered. Okay, hope this makes sense. Let me know what you think of this strategy. Have you employed anything similar? Have you ever done a strategy like this before? Have you ever snuggled your positions? And also, let me know what you think about the market overall at the moment. Do you think we're in a bear market, a bull market, sideways? Let me know your thoughts. Anyway, thanks for watching. Hope you enjoyed. Subscribe if you're new, and I will see you on the next video. Peace.